Hello, and welcome back. It's Scott. I want to talk about Tesla, China, Bitcoin, and how all of them relate, and also how lending and the overall crypto market may become a problem. Tesla bought $1.5 billion in Bitcoin uh, in early February of 2021. Tesla then in turn sold about 10% to supposedly prove the liquidity of it as an alternative to cash, so the ability to turn it into cash when they needed it. So that's very important to have a liquid market to be able to trade that in for actual dollars to buy real goods and services, because not everyone takes Bitcoin. Just recently, May 18th here, Bitcoin plunged 30% to 3,000. Little bit of an over exaggeration. It's probably about, or not 3,000, 30,000. It's about 38,000 at the moment. At one point, it's just, lowest point of that time. Right now, like I was saying, it's 38, 37,000. So it's been up as high as 60 some or 63 around this time in April, and then has subsequently bounced and then dropped off again. Overall, the crypto market has a somewhat similar pattern. So Bitcoin tends to reflect the entire crypto market in many ways. And it's also had this same sort of decline since around April. Or, well, this from April, you can see that the market was decreasing and then it actually grew and then it's actually dropped overall. So the market capitalization itself has dropped off. So one important thing is how these markets are actually made. So generally speaking, in a market or an exchange, there's someone called a market maker. Just think of them as a middleman that allows the buying and selling, and they marry up the buyers with the sellers, and they just keep the market moving. Now that can be a good thing or a bad thing. Essentially, that if it could all be done electronically and point to point, market makers are a little redundant and a little bit of actually waste in the system. However, market makers in certain times of crisis can actually be a very good thing. So I want to describe really quickly an idea where you have a market maker and essentially they are working with different groups of buyers and sellers. This could be within one country or it could be in multiple countries, for example. And they're helping exchange between buyers and sellers across markets and within local markets. Now, going from that point, what happens if there's an issue? Well, coincidentally, the companies themselves, let's say this is the stock market, the companies themselves can actually trade or buy and sell their own shares, as well as the government can buy and sell their own shares to stabilize the market. This is not the same case for crypto. In crypto, we don't have a market maker of last resort. Companies may not be able to buy in the same way, and they don't have the same benefit. Likewise, we don't have the same government intervention possibility here. If these exchanges or these markets fail, there's no one coming in to save them. The Fed is unlikely to come in and start buying cryptocurrency. How then are cryptocurrencies working and how efficient are they? Essentially, if you're a US citizen and you send in your money into one of these exchanges, which the exchange acts as a market maker, they give you shiny new Bitcoin. Likewise, if, for example, someone in China is mining, they essentially are getting Bitcoin and given your dollars or given a currency. In this case, however, if you think about that, that means that again, we're giving dollars to the market maker. Market maker may give some dollars to the producers, the miners, and then essentially the miners are creating this Bitcoin and giving it back to us. Now, there is obviously now a question of, well, where are these miners from? Is this a foreign mining operation? And definitely China has foreign mining operation, as well as a significant amount of Bitcoin mining is done in China, which then brings you to ask, well, is the Bitcoin actually related to some local currency that's not the US dollar? So maybe there's an exchange rate that's actually going on between here, and Bitcoin is just proxying between them. This is actually known that Bitcoin is actually correlated with offshore renminbi or yuan for Chinese currency futures. Ultimately, if you look at the graph, you see a very similar dip and a very similar recovery between the yuan and Bitcoin. Now, China has definitely been cracking down on Bitcoin mining and any type of use of Bitcoin. However, it's very difficult for them to control. In many cases, they can say not to do it and they can try to block the traffic, but if you are making enough money doing this, it may behoove you to continue mining. So that leads us to, which ends up showing, okay, if we're giving dollars, they're receiving dollars and they're mining Bitcoin and we're getting Bitcoin, this may just be a proxy for that currency exchange. Likewise, on top of that, there are lending institutions which, for example, you may give your Bitcoin to things like Binance or something similar, and they will lend it out. And they're willing to give you a certain amount of interest, typically in some type of coin. But why? Why such a high amount of interest on a crypto? They have to obviously make more than that in order to get back. Well, if they are turning that into cash or changing that or exchanging that for crypto and then turning that into cash, they may be able to buy options. And options have and can have an amazing amount of leverage, either on an inside deal or if they are just directly buying it. They can take on a lot of additional risk through those exchanges and through those lending institutions, which you may believe your Bitcoin is nice and secure. However, once you lend it out, these are not banks. They're not secure. They can leverage your money up in any way because this is highly unregulated. And once they fail or once crypto drops significantly, which it looks like it's working on doing, some of these exchanges aren't going to make it. And ultimately, when they say, we don't have your money right now, please come back later, you're going to have a traditional bank run where different buyers try to sell and the market maker, the exchange, goes, we don't have any right now, please come back later. You're going to have a freeze out, which has already happened in multiple exchanges, where the exchange can't get back the money and they can't get back from whatever lending institution either. So therefore, your money is gone. So I just want to give you this warning and thought. Doesn't mean it's always every single exchange would be in that situation. However, this is a difference between the stock market and the cryptocurrency market. There is a highly unregulated activity going on in the crypto market where they are making a significant amount of money in transactions, in fees, in lending, and in leveraging all of the money they're getting in because they just don't have any regulation at all. And as that's happening, we're thinking we're getting rich because the market cap is going up. But yet, if your money is leaving the system, that market cap is just a balloon full of air that's going to deflate. And potentially, if it's 10 to 50 times as inflated, that means you get 2 cents of every dollar that's in the crypto market right now. Not a 30% drop. That's a 98% drop potential. That's scary. So, if you guys like this, please like and subscribe. We'll continue going and continue making good content. Thanks.